Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, the ISM non-manufacturing index for December fell 3.1 points to 57.6. Markets were volatile as investors considered trade issues and the U.S. government shutdown. U.S. oil advanced 1.5% to $48.66 a barrel, and the energy sector rallied. The Dow Industrials closed 98 points higher, partly on the continued strength of reassurances last week by Federal Reserve Chair Jay Powell that the central bank will remain flexible. On Tuesday, the JOLTS job openings report for November fell 243,000 to 6.888 million openings. Officials from both China and the U.S. express optimism that a trade agreement can be reached. Bank stocks struggled due to the possibility of reduced rate hikes from the Fed. However, markets overall rose, with the Dow Industrials gaining 256 points. On Wednesday, the EIA petroleum status report for the week ending January 4th saw crude oil inventory decline 1.7 million barrels. The Federal Reserve released minutes from their previous meeting, and it showed some of the members didn't want to raise interest rates at all due to lack of sufficient inflationary pressure. All of them expressed caution for future rate hikes, stating they can afford to be patient. A meeting between President Trump and Democratic leadership ended with President Trump tweeting it was a total waste of time. U.S. crude rose 5% to $52.28 a barrel, and the Dow Industrials closed 91 points higher. On Thursday, jobless claims for the week ending January 5th fell 17,000 to 216,000. Macy's reported disappointing holiday sales, putting pressure on the retail sector, and American Airlines lowered its revenue growth forecast, putting pressure on airlines. Nevertheless, broader markets continue to rally, with the Dow Industrials rising for its fifth straight day to close 122 points higher. On Friday, the Consumer Price Index for December declined 0.1%, its first drop in 9 months, mostly due to lower energy costs. Markets were down at the open over concerns about a slowdown in growth in China, as well as the prospect of a prolonged government shutdown. Now let's take a look at some stocks. Roku Inc. shares skyrocketed by more than 23% on Monday after releasing preliminary numbers showing streaming hours grew by 68% to 7.3 billion hours, and active user accounts were 27 million. Roku's strong fourth quarter now brings its fiscal 2018 streaming hours up to 24 billion, increasing 61% year over year. Boeing reported delivering a record number of aircraft in 2018. For the fourth quarter, Boeing delivered 238 commercial airplanes, bringing 2018 totals to 806. However, Boeing previously forecast full-year deliveries of 810 to 815, but suppliers have caused shipment delays. Boeing stock rose by 3.2% following the announcement. Constellation Brands reported its third quarter results on Wednesday and topped analyst estimates. However, shares plunged due to weaker sales in its wine and spirits segment, as well as its investment in Canopy Growth backfiring. Constellation earned $2.37 per share on revenue of $1.97 billion. Constellation also said its investment in Canopy will slash 25 cents off its full-year earnings per share outlook. Bed Bath & Beyond announced its third quarter results on Wednesday and topped analysts' earnings estimates, which sent shares soaring by 20%. The company reported earnings per share of 18 cents on revenue of $3.03 billion. Bed Bath & Beyond previously forecast declining profits and earnings. However, the company said it is now ahead and projects its fiscal 2019 earnings per share to remain flat year over year. Macy's shares cratered by 19% on Thursday after the company reported disappointing sales results for the combined months of November and December and cut its 2018 earnings outlook. For the 2 months, Macy's reported comparable sales were up 1.1%. Due to the weaker than expected holiday sales, Macy's revised its forecast for fiscal 2018, now expecting net sales to remain flat compared to its previous projection of a 0.3 to 0.7% increase. The retailer forecast diluted earnings per share of $3.95 to $4 compared to its previous outlook of $4.10 to $4.30. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.